Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, January 11, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, in simple terms, you can see from a daily chart perspective, they ran a test of the 20-period moving average and bounced considerably higher, well off that, finishing basically, it's a rounding error, but flat-ish on the day, down 20 cents or so. That's flat on the day. Now, we have a lot of stuff today, so just bear with me. There's a method to the madness. Just as an aside, while the market was going down early in the day, and you can see here in a 15-minute chart after the gap higher open, market's going down. And what I got in the live room was Panicsville. So traders believe that because the market's going down a little bit, that this is the big collapse. We just put in a top. We're not going to see new highs, all that stuff. What's interesting is at the time, and I reiterated this in the live room, you have to put it in perspective. I bring back up the daily chart, and then I remind them that nothing is wrong here. The market was at the time down 0.8%. That's not a collapse. That's not a big decline. That's just a pullback within an uptrend, quote unquote, from the live room this morning. Subsequently, what happened was the market bounced. What's also interesting was we talked over the last couple of days about a tinfoil hat event that occurred this morning, coinciding with the phony CPI number. And lo and behold, some mysterious way of Mrs. Market, the market did decline today, but did bounce back. There was a, what we call it in this trading parlance, a rescue operation. Of note, tomorrow we have the second half of the alphabet soup. Today was CPI. Tomorrow will be the PPI, Producer Price Index, another market moving type event. We don't care what the number is. We don't care which way. Case in point today, when the CPI came out, the market dropped real quick. Then it went up, it gapped higher open, then it dropped. Did any of that movement really have anything to do with the CPI? My contention is absolutely not. But for most people, most traders, it's hard to wrap your head around. We'll just say the market vacillated around the CPI number. Big picture is the market is a stone's throw away from the recent highs. They spiked it today. They weren't able to get above and close above for more than a few seconds. And that's the end of it for now. That doesn't mean they won't gap above it tomorrow. That doesn't mean they won't be much higher next week. We don't know one way or the other. What we do know is, above all the moving averages, the trend is in fact your friend. A couple of more interesting tidbits around the market parlance today. Big spike higher in Bitcoin. The high today was 49,048. I gave traders in the live room just over 50,000 as a place. The actual number, you see it on the board now, is 50,715. They didn't get there today. Doesn't mean they will or won't get there. That's the next number of importance that I have based on the work that I do. They're still hanging around the 46.4. You can see that actually right now up here in the upper left. 46.4, that was a number of importance. They got above it. They came right back to it. They're eating time off the clock for the last several days around that number. We don't need this other zone anymore. We already know that that was important at the time. They're above that zone. They're above all the moving averages. The trend is your friend. But what's interesting was this swing trading system. The alert was sent out via text and email when it hit the number 162.45. 54, pardon me, and they proceeded to bounce roughly $4 today intraday. That's a nice start in the latest swing trade from a long side position perspective. Long was doing fine. Shorts did okay today. The lazy swing trader system is working. Net on the daily chart of the SPY, we're going to use today's low as a bogey. They would be under the 20-period moving average, below today's low if they did that. That would promote another leg down. The leg down would be in the vicinity of this breakup candle low, 468.30, 50, 469, 468. All that in that general area would be the next target if they got below today's low. Can they do that next week? Of course they can. Can they be a lot higher next week? Of course they can. We don't know in advance. Right now, the market's in an uptrend. She's bullish. She ran a test of the 20 today and bounced off of it at face value. We're the umpire calling balls and strikes. That's what happened. From a big picture perspective, the all-time high is right under 480. That's really the next target. Get above, spike above 480. Then we'll talk about it at the time. It's a chip shot away, a stone's throw, right around the corner. What about inside the numbers? How did the trading room do today? How did inside the numbers do? Well, we're going to uncover that in a moment. Actually, just fine. Another day where we were able to pile up the profits for members. And we have like blockbuster numbers. Here's one trader that sent me an email this afternoon. This was an intraday trade. How did he know about 472.50? Well, you'll find out in a moment, but it was certainly discussed in the live room inside the numbers. That was a buy area. 25.86 and change on that particular trade, 100% on the options, same day. How about Michael W., experienced trader in the live room, probably my best day ever trading in terms of discipline and patience. Patience is something I discuss multiple times every single day. Out of my final trailer at 476 as planned, 25K plus in the day in total. Well done, Michael. You deserve kudos. These are real numbers, folks. These type of numbers change lives. Let's check out inside the numbers. So you can read the notes, pause the video, and go back to the chart to double check the work. I urge you to do so. I'm going to highlight a few important things. Let's start with 477.55. This is at 0 dark 30. Last line of defense before they start testing the former all-time highs. Okay, fair enough. Right of the vertical is today's activity. The blue line is at 477.55. You could see what happened. The market opened right above that and immediately collapsed. Did we have traders short from up in that zone? Yes, we did. Now you go down a little bit and let's find out some important stuff below. 476.20. That's important. You'll see that over and over again. That was a pivot. Above is bullish, below is not. You could see what happened. They stopped going down when they got there, but they did continue. The first order of business in support is they stopped going in the direction they're going. What traders heard me say in the live room as it relates to that number on the way down this morning was, that's a coin toss number. They can bounce it there. My number is lower. Where's my number? Hold on. Below, on candle closes, below 476.20, opens the door for another leg lower down to the likes of 474.65. There's your first look at 474.65. You could see the market bouncing below and above that. But wait, there's more. That was the zone. You'll see it on the board. The live room had it. That was the zone for a bounce back in the other direction. They gave us the trade. They didn't give us the full-on rocket ride, but they certainly gave us the trade. If you're painting by the numbers, entry number 1, entry number 2, average cost here, 474.30, 35. Where did they go to? 475.55. Guess what? That's a nice trade. 10, 12-pointer, we'll take it. Remember, pause the video, read the notes, go back to the chart, and double-check the work. 8:33, the 8:30 data shuffle is out, so I'm just talking about the CPI number. 9 o'clock, what's the program? Well, at least we have a little volatility since the CPI data release. Below 476.20, and the door is open to fall and run a test of 474.65, and we just showed you this, down to 473.85. That's a zone for a bounce back in the other direction, scalp with potential type of trade. What did they do from that zone? Exactly that. What numbers are you using this morning? Where are you getting your numbers from if they're different from mine? Remember, pause the video, read the notes, go back to the chart, and double check the work. Everything I just described is in here in earnest. There it is again. 474.65 down to 473.85 as a zone for a bounce back in the other direction. If they're not going to recapture the pivot, which means as long as they're below 476.20, that's it. That's the zone. We had traders short that covered there. We had traders flip it. We had traders buy down there. We have something for everybody. Pause them, read them, go back to the chart to double check them. How about this? Below 473.85 on candle closes would be the bear case for another leg lower toward what? 472.50. Write this down. 472.50. 472.50. How you doing? How do you like dem apples? Moving right along. There it is, 11:14. 472.50 down to 471.85 for a bounce back in the other direction situation. They bounced it right away, and that was your morning low and low of day. Pause them, read them, back to the chart to double check them. It's all in here, everything you need. On the way down, on the way back up. Stocks on the move. Keep in mind, earnings season gets kicked off really in earnest tomorrow on Friday. So today there was one on the board, LPG. Let's take a look at what happened there. 39.68 was the suggested entry. Haircut at the opening bell. Did we have traders take advantage of this in the live room today? Absolutely. Inside the numbers, got it. Live room, got it. LPG, nice bounce. They gave you the base hit and then some. It's pretty much a stand-up double from a day trading perspective. By the way, did I mention the numbers work? Swing trades, day trades, scalp trades. Doesn't make any difference. The process remains the same. The adjustment is the type of trade. What's going on over in Camp IWM? So here's an important thing. We talked about this in the live room this morning. It's very, very important. This low here from this breakup candle, 192.26, that's the line in the sand. So they broke below it, but they snapped back. As long as they remain closing daily above that number, they can close intraday for a while or spend some time intraday below that number, but closing daily below that number opens the door for a whole nother leg lower down to 188, 187, down in that neck of the woods. However, staying above is the bull case. Now, they were down 7/8% today, $1.53. Relative weakness against the SPY, and there's been relative weakness. We've been discussing this in the live room in real time. Canary in the coal mine. We've got the IWM. We've got Team Transports, another canary in the coal mine. They've been weaker as it relates to or against the overall market on what's called a relative basis. Breakpoint or bogey, 192.26, Camp IWM. Get below, bear case. Stay above, bull case for a bounce. They'll want to see if they can recapture the 20-period moving average on the bull case scenario. What's going on with the folks down at the transportation department? Well, they're still in this bearish, flaggish kind of situation. Tried to break down today, were rescued. That doesn't change the pattern that's developing. What does change the pattern that's developing? What breaks the chain? Getting above here, above this breakdown candle high, they would run a test from the underside of the 20-period moving average. That begins to break the chain. Until or unless that happens, this is a bearish situation. They tried to break down today, were rescued, but it doesn't change what's happening. We're the umpire calling balls and strikes. Qs, no problem with the Qs. Same as the spiders, ran a test of the 20-period moving average, headed toward the former highs, most recent highs, which of course happen to be all-time highs. Up 85 cents on the day. Nothing wrong here. Trend is your friend. Move it along. XLF, what have we been saying? As long as they're above all the moving averages in an uptrend, the trend is your friend. There's nothing wrong here. They ran a test of the 20. Below today's low is your bogey, just like the spiders. Get below today's low and something is changing. Stay above the 20-period moving average. Nothing is wrong. If nothing is wrong with the financials, nothing is wrong with the overall tape. What's going to happen tomorrow with the reporting of the financials to roll out earnings season, among others? We've got, I believe, Wells Fargo, Bank of America, JPM, and a few others. They will move the financial index. What about Smashmouth? Any problem with Smashmouth? Nope, they're riding above the 20-period moving average. Opportunity to fall today. They were rescued. They didn't take the opportunity. The bears couldn't do it. Bulls prevailed. Nothing wrong with this particular market. They're simply knocking on the door of filling this gap. I don't think they got it today. The gap is 174.87. high today was 174.53 that came up short. Sometimes they come up short, other times they spike them through. They had an opportunity. They didn't take the opportunity. We'll see what happens going into tomorrow. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.